And at the edge of the CME Group trading floor, we have Tim Evans standing by. Tim, thanks for joining us here today. Good to have you back with us once again as we take a look at the markets. Interesting where we have the wheat going one direction, but you have the corn and soybeans going the other direction for the most part. Why the strength in the wheat? Any idea?
Well, the wheat is, I think, beginning this week is actually moving on its own fundamentals. I mean, it's largely a weather story, a South American weather story that has a strong correlation with corn and soybeans. But the international fundamentals driving wheat are very different today.
All right, so the value of the U.S. dollar has been dropping. Could that be part of it here today with the wheat? Usually the wheat seems to be almost more closely correlated to the U.S. dollar index than what the corn and soybeans are.
Yeah, that's without a doubt, Marlin. A very strong force that we're seeing in the market. I mean, I also think just the technical makeup of the wheat market has improved. Obviously wheat, has had a tough go of it here, over the last year. But, as the market found that, what I believe to be a seasonal bottom, it's not, the sellers really don't have a whole lot to work with. So I think more than anything, we're seeing a decent amount of short covering here over the last couple of weeks.
Well, we talked about Chicago wheat being a couple of pennies higher. Let's look at the other two exchanges, too. On the Kansas City market here, on the March contract, we have March trading just 3/4 higher at 443 3/4. It's a minor victory for producers because it had been lower by a few cents. Now, on the Minneapolis wheat, at the present time, we have the March contract down 2 1/4 at 566 1/4. And I wanted to touch on that cotton market, too. On the cotton, we have the March contract still 166 points higher at 74.70 per pound right now, so a big gain in that nearby cotton contract. Did you see the movement in the crude oil this morning there, Tim? A lot of negative pressure on the crude oil trade today. Didn't know if that's having any spillover impact into the other commodities today?
Yeah, I think so. I mean, really when we kind of began the day early, outside market environment was relatively stable, but it soured here as we got trading kicking off in Chicago, and it's weakened throughout the morning. As they say, a rising tide lifts all boats, and that definitely is having an impact on grain weakness here as we begin trading today.
All right, so right now on the crude oil, we'll spell out the prices for everybody that's out there listening on rural radio. The March contract down 50 cents right now. This is West Texas Intermediate crude, by the way, down 50 cents, and it's priced at 52.72. And on the heating oil trade for your diesel fuel futures out there on the farm and ranch, we have February currently down to 1.6 cents. It is quoted at 162.9 per gallon. We'll just round it to 163 at the present time. We're going to be back in just a moment. We'll talk more about the livestock trade. We're talking with Tim Evans of Longleaf Trading, and we'll be back with more with Tim right after this. Now with Tim Evans, he is the owner of Longleaf Trading, and he's speaking to us live and direct from the edge of the CME Group trading floor there in Chicago. Tim, we were talking about the fact that this is only the second time in 5 weeks that we have a full trading week. I just wondered if you have a full roster of participants back on the trading floor today.
Yeah, it feels like we're back to normal. Definitely the calendar this year has been a bit strange, but yeah, it looks like everyone's back, and we're most likely going to see a pretty active week of trading here at the CME.
So I'm just curious, what is your take from talking to the traders on the trading floor now that the administration has changed hands and everything is changing over in D.C.? We had all the hoopla last weekend. Yeah. What's the sense among the traders on the trading floor when it comes to commodities? What do they think the future holds early this year here in general?
Well, as I kind of referenced a little bit earlier, we started off this morning with a pretty decent tone to the market. I think the reaction that we're seeing here mid-morning and what we could see throughout the week is just the kind of reality biting everyone in the rear end. It's one thing to kind of hope and speculate on what's going to happen, and the market really seemed to get in kind of a commodity inflation mind state, maybe 4 or 5 weeks going into inauguration of last week. Now that President Trump is in fact President Trump, now we're looking at the hard facts of, what in fact kind of policies is he going to be able to get through Congress and signed into legislation. And now we're, seem to be kind of focusing on some of the difficulties that we're going to be facing here in the near term. So, I think the markets are kind of taking a step back, as we look at the realities of all of this and see things are going to be a little more difficult than we originally thought.
And with the weakness in the value of the U.S. dollar and also the crude oil, it is good for one thing, that's for sure, and that's that gold market. It has been surging ahead about $10 in value today. I want to take a look here at our livestock trade here, Tim. On the live cattle first, let's go take a look at the futures. We currently have February down 37 at 119.88. We've been on both sides of unchanged here. We're roughly about 70 cents off our earlier high right now. April down 13 at 118.85. And then if you look at the feeder cattle side, here you have the March contract down 40 at 130.88. April down 20 at 129.90 per hundredweight. Is this just breaking the action to the upside, do you think?
Yeah, I mean, if you look at the market from a technical standpoint, I mean, there's a very predominant upward trend line that's trading in a very nice channel. We seem to have found kind of the top of that channel as those cutout numbers came in last week. But I think there's very strong support in the market, and I'm expecting, for the technical kind of setup that we have in front of us to continue here as we trade throughout the week.
All right, so we can see, our viewers at home are seeing a good bar chart there on the February live cattle and the trek that it's been on since October. It's been a long run upward. Meanwhile, let's take a look at our lean hog futures here. Let's get you updated there. We have the lean hogs on the February down 35 at 64.95 per hundredweight. April down 58 at 67.90. The biggest loser is May, going down 88 cents here at midday. What do you think of this lean hog market here? Is this something to be concerned about, or is it okay?
No, I mean, I frankly, I'm bullish hogs, as I've talked about here on your program the last couple of weeks. Again, I mean, I think we're seeing more of a technical pullback. I mean, that's been a common theme in commodities over the last couple of trading sessions. But I think the fundamentals are still quite strong. I'm expecting the lead contract in April to perform well this week, just as I am in the live cattle space.
Tim, good to visit with you again. Thanks for all the information. Good stuff. Appreciate it very much. Tim Evans with Longleaf Trading, speaking to us direct from the trading floor in Chicago. So very interesting perspective on the attitude of the traders on the floor today.
Yeah. All right. Thank you so much, Markets Editor Marlin Bohling. And it's